Well, good Thursday to every single one of you. Happy that you've joined me for our Long Verticals and Diagonals webcast. I'm Connie Hill. Happy to join you here today. One of the important elements of our class is following up on trades that we've done. And one of the more difficult trades that we deal with in this class is diagonals. It's a little bit more time intensive. And the way that we've been trading them, we do a lot of math. Okay, so today, get your calculators out. You're going to have to help me make sure I do my math right as we follow up on some of these diagonals and see the progress that they're making. All right. I am joined in the chat by Barb Armstrong. Happy Barb's here, fellow coach and friend. She's here to help me identify your questions, get your questions answered. We'll both keep our eye on the chat. She might have to get to some of the things I can't quite get to. All right. But I do want to give a hearty welcome to Paul, Mike, Muriel. Muriel's been busy in the chat here. Richard, Michael, Will, Life in the Fast Lane, Olga, Farley. Oh man, there's a whole bunch of you, and Scott. Happy that you're all here. Now, I hope you're following us on X. I'm Connie Hill CS. Barb is Barb Armstrong CS, and we'll post educational content out in our X account. As we notice things about charts or what might be going on in the market that we think might be helpful to you, we'll go ahead and post about it. So take advantage of it. It's free and easy to sign up for. Let's go through our disclosures, lay out our agenda. I've got a pretty full class for us here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is intended for educational and informational purposes only, so don't consider it a recommendation. We will be using the Paper Money software application as for educational purposes. I think it's a fantastic tool, especially as you're trying out these strategies, long verticals and diagonals. It's a great tool to have to say, let me get familiar with these strategies. Investing involves risk, including the loss of principal. When we talk about probabilities, keep in mind they're theoretical in nature and never guaranteed. Past performance of any security or strategy does not guarantee future results or success. We talked about rolling a lot in this class, and rolling strategies can entail additional transaction costs because we're closing one trade out, we're opening another trade out, just kind of all on one ticket, but we're still going to have the commissions for the ones we're getting out of and the ones we're getting into. All right, we're going to have a real quick announcement. We're going to talk about a little bit theoretically about diagonals and verticals. Hopefully you're getting more comfortable with the concepts of those two option strategies, since that's all we focus on in this class. When we talk about these strategies, there is the impact of price, time, and volatility. And so as those become apparent, I like to mention those to you. We're going to be looking at a lot of examples here today. So first announcement, just our upcoming workshop and market drive events. If you can get yourself to one of these events, you'll be happy that you did. Okay, whether you live in that area or you can easily get there, or maybe it's just time to go visit Chicago in the nice, lovely summertime, although it's been a little bit of a heat wave back there. In any case, Chicago, July 17th and 18th, that'll be next weekend. Dallas Market Drive event on August 1st, and then Orlando, August 7th and 8th will be another workshop. So if you go, especially if you go to Chicago, Barb's going to be there in Chicago. Go say hello to her. We'd love to meet you when we have the opportunity to do so. All right. Let's see. CB wants to make sure that we cover our Cisco trade again. Yep, our Cisco trade is on the agenda for today. Long verticals and diagonals. Generally, they are directional strategies. I would say the long vertical is more directional than the diagonal. And the way we strategize with them can be a little bit different. We've taken an approach in this class that we're using diagonals for a longer period of time. Although you don't have to, you can set up a real short-term diagonal. Maybe we'll need to address that in a future class. But essentially, we're going to have one long leg and we're going to have one short leg. The difference is with diagonals is that we're working with different expirations. With a long vertical, we use the exact same expiration in the trade. So having a different expiration is a little bit, you have to get used to it. Okay, it takes a little bit of getting used to because most of the strategies that we do don't really work with different dates. Okay, but we do so a lot in this class. Okay, I'm glad you got your pencils out and you're ready to go. All right, let's head over to Paper Money. Interesting what our markets are doing. Yesterday was a big sell-off, and then what happened at the end of the day? Bulls came in, started pushing things back up. So our SPX is kind of looking like this, but I do want to point out something that I'm just kind of trying to keep track of and just notice. And that is, I've got a triangle drawn in here, but we also have a pattern here called a head and shoulders pattern. And so suppose we're looking at a person head on. Here's their shoulder. Up here is their head. And then over here is a shoulder. And then sometimes these head and shoulders patterns can have two shoulders. They might have a shoulder on the left side or the right side. This side is just fine to have one shoulder and this side has two. So the profile of the person is going to look a little weird to you. But in any case, it's a reversal pattern. And I bring it to our attention because maybe the SPX is not as strong as maybe it was back here earlier in the year. It could be slowing down a little bit. So we just want to be aware of that. You know, this second shoulder here is forming a lower high. And so just know maybe there's a little bit of weakness. Now, the thing that's showing strength is the fact that after this pullback, now we're getting higher low points, okay? And in fact, this line, I might even have to come in here and make this a real steep line here. But the way it is for now, this is what it's looking like. Just be aware of the potential weakness. We're going to wait for confirmation. If we had a neckline in here, I would probably draw the neckline something like that. And we haven't really broken the neckline yet, but we would watch for that. Okay, NDX, it's similar looking. I think it's rebounding a little bit stronger today than the SPX as far as percentages. But again, same thing here. Could this be a shoulder, a head, and another shoulder? It could be. Okay, so just be aware of that. I've got our RSI line down there as well. And usually, you know, we're looking for this to be upward trending if we're looking for strong trend. And what we're noticing here is that the low points kind of are going a little bit lower, but the newest low is actually not down sloping. It's actually kind of, I wouldn't call it up sloping, but maybe a little bit flat. If it does start to become upward sloping, then that would be intriguing to us that maybe there's still some more strength left. All right. Next up, let's see. Oh, Kevin says, come down to Orlando. You can leave your coat there and leave your coat there. Yeah, if you're up in Alaska right now, you still might be needing your jacket, but Kevin is enjoying sunny Orlando. Okay, let's talk about a couple trades we did last week and want to get into this management of the diagonals where we'll spend a little bit of time. Last week, we put a trade on UPS. And maybe let's just go let's just maybe look at 3 months here so we can see it a little bit more in depth. We got in here on this day where I've got the green oval. And is that right? Yeah, that is right. We did 2 weeks ago. It wasn't last week's trade. It was 2 weeks ago's trade. And we just did a long call vertical here. We saw the stock rebounding here off the 10-period moving average, maybe bouncing off a little bit of diagonal support here. So we put on a long call vertical. Well, today, early in the morning, it hit its price target. So if we come over here, we can see, I might need a few more days in here. Let's just go to 15 days here. We bought in for 297 and we said, hey, if we get a chunk of that, and I don't remember what the percentage was that we used there, but we typically are going to put in a percentage target so that if it goes and gets a majority of that gain, it gets us out of the trade. And so we bought in at 297. Which was a little bit cheaper than $3. And then it looks like here, we had a couple of orders. This one expired. We've got another order in here at 437. And that's where it went ahead and it hit our target this morning, paid us 439. Okay, so we got out of there a little bit nicer than what we thought, but we got out our chunk. Second trade, need to check up on here. It's TXN. Texas Instruments, and this has been kind of an interesting trade for us. Let me see. We got in 2 weeks ago on this one, I'm pretty sure. Let's go check our dates, though. And I'm going to clear that up. On TXN, we were down early in the day. We were down quite a bit on this trade. We're down 300, and we only have 8 days for this stock before it expires. So we're in that time frame where we really want to probably kind of find an exit in here. It's not where we would love to see it quite yet, and we do have a little bit more time. Tomorrow's Friday. I would love if it would go and hit its target tomorrow and then get us out for the weekend. Or I should say before the weekend starts, okay? So maybe getting out at 7 days left, okay? I would like it to do that. I'm going to keep an eye on it. It's in a much better position of getting us out of the trade than it was, say, a couple of days ago. We were down on the trade pretty decent, but we still had time. And we've gotten this nice little bump on Texas Instruments. So we're gonna let it play out a little bit longer. Tomorrow, if it shows weakness and we're still in the trade, I'll just go and get us out of it. We'll see if we get a little gain or a little loss on it. If it explodes for us, fantastic. It'll get up near our target area. And if that's the case, I'll make sure that we take our target and get out by the end of the day is what the plan is going to be there. Okay. All right. Oh, I am noticing there is a survey out in the chat. And those of you that have been with us before know that we'll do surveys from time to time and ask for your input, your feedback. These classes are for you. We want to make them the best possible. So if you would just do me a quick favor and fill that out. It's 2 questions, hit the radio button, plop, plop, you can be done, right? Those are easy surveys. I like easy surveys. There's a couple of questions if you want to answer them. You're welcome to do that. Or if you want to use that space to write me a message, you're welcome to do that. I love hearing your comments. I love to see what problems you're having or concerns you have and address those in future webcasts. Okay, so you don't need to do it right now, obviously. But before you leave, if you'll just select on that link, then fill it out before you take off. Barb will post it out there a couple of times for us so that we don't forget about it. And I'll try to remember here as well. Okay, so that's the story on Texas Instruments. Let's take a look at Apple. Now, Apple, we got in a bearish trade here and it went against us immediately. So what did we do? Well, the next week we got in on a bullish trade on it. All right, so on Apple, and again, that was just last week that we did that, the 2nd of July. So we've got a little bit more time in here. We've got about 3 weeks before it expires. And right now it's in a decent position. You can see we're up $400 on it right now. It's pulled back a little bit here today. But, you know, technically it's actually still pretty strong. Maybe a little bit of a pullback. You know, there was that news of Apple and Cisco. And Cisco kind of really benefited from that. We'll be looking at Cisco in a minute. And Apple seems to be pulling back a little bit, but it's not major. You know, if I were looking at this and kind of dissecting it, I'd say, oh, we've got a nice flagpole here and another little flag consolidation. And we would look for the breakout. If somebody wasn't in this trade, they'd look for the breakout of the flag for a fresh new entry on it. Okay, so it's still looking technically strong. We're going to let it continue to play out. All right, let's take a look at Cisco. CB, we will honor your request of looking at Cisco. Oops, let's get the right letters. SCO, there we go. Here's our Cisco trade. Let's talk about what we have here. Let's go to the monitor tab for a moment. On Cisco, this is a trade we're going to be in for a long time. We bought a really long dated call option. Okay, you can see out here to June of 27. Okay, so we bought this with over a year's worth of time with the intent that we're going to be in the trade for a long period of time. What we want to do is we want to sell calls against it weekly to lower our net debit on it. Okay, we got in the trade at 2025. We would like the call to appreciate in value kind of gradually over time. And then here, when we sell that call against it, we're hoping to bring in premium to lower the net debit. Now, this one, because Cisco, let's look at the chart here. Cisco took a little bit of a pullback through here. Now, this was our class last week. I've put another faint green oval on last week because that's where we sold another call option. So we had our initial call option we sold against the long. I can't remember if we had another one in here, but then we did have another one last week when we rolled it. And that's our intent, is to roll it in class each week. Well, it had this down type activity. So you can see, oh, well, we typically are, that's not how we want that to work, okay? You can see actually with today's price action, we're in the money on this, okay? This is a good situation to point out to you that when the short option is in the money, there's the potential of being assigned. Paper money does not mimic that functionality, okay? And that's one difference you need to know about it and the live market. In a live market where it's in the money here, we very well could have been assigned early on it, okay? We're not seeing that action, but just know that could have been a possibility. Now we're trading something that has lots of contracts on it, so it's very liquid, but you can see we're down on it. We brought in 113 to go close that out and roll that trade to continue the trend and sell a new strike price. We're going to be doing it at a loss. That's okay. We're going to have some of those along the way. It's nothing to panic about, but it does expire tomorrow. So we are going to take our rolling action today. All right, what are we going to, we're going to basically buy this one back. What are we going to sell in its place? Well, let's come over to the trade tab. Our plan is to come out and sell each of these weeklies along the way. Now, as we look at this, stock's at 118, so typically would want to sell a little bit out of the money. And we could sell, I'm going to focus on our delta here. We've got oodles of open interest. See all these thousands of contracts? That makes it nice. Makes our bid-ask spread tighter, makes it easier for us to make money on that. And just because we don't have such a big spread to make up. So we could do something here like maybe 120, 121. Okay, somebody might sell. If you wanted to be even, I'm going to say, more conservative in the trade and you wanted to sell even further out of the money, you could. You don't bring in as much premium, but we're going to have plenty of opportunities to be selling premium against that option. All right, because it's actually moving up kind of nicely, let's maybe go to the 121s. Okay, we're going to go a little bit, maybe a 37 delta here. We're going to go ahead and sell 121. So I'm just going to make myself a note here in the margin that that's what we're going to roll it to. I like to make that decision up front. All right, now let's go through the mechanics of it. This particular diagonal, we haven't had a lot of opportunities to sell calls against it yet. So we're not going to go back and do all the math on it. We are going to do that on our PanW trade today. But let's go ahead. We're just going to line up here with this option that it's time to roll. It's time to get out of and get in a new trade. We're going to say create rolling order. And that just means we're doing it in one ticket. If it's confusing you to do it this way, don't. Just go close it out by itself and then come back in and sell the option. Now, when I say roll, it doesn't know what we want to roll to. Now, it goes and gets the next week, which is convenient because that's what our plan is. So we're going to do the July 17th here, but it doesn't know what strike price we want. Okay, so it just puts the same strike price in there, or sometimes it might go out one. I think usually it just sticks with the strike price. We're going to go down to 121 here. That's the one we're going to sell. And because it is a significant loss right now, that's why it's giving us a debit here. If we were not at a loss on the trade, more likely than not, it would be a credit here. But again, with that loss of the option being in the money right now, this roll we're going to be taking a little bit of a debit. So if somebody didn't want to, say somebody was like, well, I want to make up more of that net debit. I don't want it to be such a big net debit. You could come out here, you could sell the 120s, the 119s, you could even sell 118 if you wanted to. I would say those are a little bit more aggressive, and they could get us in a position where it's in the money again. Okay, so that's why we're going out a little bit further. Okay, we are going to hit confirm and send. We're going to send this guy on his way. And we're going to continue to look at it. Next week, we're going to hope we're in a situation where we can roll it, or it's not in the money, where maybe we've been able to recapture some of that profit. All right, let's take a look. There might be some questions here I need to answer. Let's see. Oh, let's see. So it's, Sam's noting on the Cisco, the 125 call expires next year. So yeah, he's pointing out, hey, it wasn't this year. It is clear out in 27. Absolutely. Okay, let's go to our one we're rolling up our sleeves on. Okay, pull out your pencils, your calculators. This one is going to take us some time. PAN-W, Palo Alto Networks. Our short option is here. It expires tomorrow. Okay, good. We got filled on that. And here's our longer dated option out in August. Now, what you're going to notice here is we're not seeing a position out here because it's quite a ways out of the money now. All right. Let me show, I think if I show 20 strikes, it'll show up here. Oh, there he is. He's over here. This is our non-traditional diagonal. And what do I mean by non-traditional? Cisco was a traditional diagonal where we're bullish on the position. We buy a long dated call and we sell calls against it, kind of like a covered call strategy, right? Where we're long the option and we're just trying to lower our net debit. Although with the diagonal, we don't have stock rights, right? Because we just have the options. On PAN-W, on this one, it's non-traditional because we're actually bullish on it, okay? The thought process here is we want to sell put options and bring in premium. Bring in premium, bring in premium, bring in premium. And that way lower our net debit. But in addition to that, we have this longer dated option. It's out here 43 days, so we still have several weeks that we can sell against it. We've had some time now in this trade. We've been in this trade since May 28th, and we have sold several put options while our longer dated put options decaying, right? We paid $21.80 for it. Right now it's down to $335. So we've got a couple of things going on here. One, we want to roll the shorter dated put and talk about that. I want you to notice here, it is also in the money deep, okay? Because let's take a look at the chart here real quick on PAN-W. It's the last couple of days here is part of the reason why it's in the money now. It had been running up fairly nicely here, and these were some, especially 2 days ago, was a decent pullback on it. You can see a big bearish engulfing candle and then some additional pullback yesterday. Today, it's so far looking like a piercing line, a reversal candle here. So looking like maybe the momentum is changing a little bit. Okay, but we're down on that option. So we've got a couple things going on. One, our longer dated option here, look how far out of the money it is. Palo Alto's at 330 and our long leg here's at 250. It's not giving us quite the protection that we need now. So after we decide what our short leg is, we are also going to roll the long leg. Okay, we're going to stay in August. And on that one, I have in mind for us to do 310. Let's see if 310 still looks reasonable here. Stock's at 330. 310 is about a 33 delta. And this again is going to be for our long leg. We want a little bit more protection. If we wanted maybe a little bit better coverage than that, we could come out here to the anywhere here, really, 320, 330, 340. But because our objective is just to have it as a hedge leg, I'm more inclined to not pay a lot for it. Okay, and just maybe go at a 33 delta. So we're going to roll this one to the 310. Okay, I'm going to erase that. We're going to go, I'm going to put long 310 is what we're going to roll there. Now let's talk about the short option. So we open up the July options here. You can see our strike price is really deep in the money. Okay, could this have been assigned? Yeah, it could have been assigned. Paper money, again, doesn't mimic that functionality, but you need to know it's a reality. And because it is so deep in the money, it's a real reality. Okay, if it were to expire tomorrow in the money, would definitely be assigned on it. Okay, so we need to sell something else. Okay, we're going to go out to the 17, July 17. We're going to go out of the money a little bit. And on this one, let's see if this would still work good. I was looking maybe to roll to the 325. 325 is at about a 40 delta. It's still out of the money right here. The stock continues to rebound like it's looking like right now. Then this credit that we brought in, the value of that will start to decay, which is great. That's what we want to have happen in this trade. Okay, so our short leg, we're going to roll to 325. All right, we're going to take that action before we pull out the calculator. So I want to make sure if there's any questions on that before we move on. Okay, sounds good. Ricebird says, I like premium. Yeah, we like premium. We like to sell premium, don't we? All right. So next up, let's do our roll. Then we're going to count all of these rolls that we've had. So let's do our, let's roll this first one here. Just customary, I like to close out of the short legs first and then the long legs, just kind of out of custom. So here we're going to be doing what? We're going to actually go to the wrong, let's go to this page and do a rolling order. So here's our short leg. We're going to say create rolling order, just closing out one order, buying back the short leg, selling another one. So here is our 350 short leg we're going to buy back. And we said here, we're going to go 325. There we go. Again, because of that big loss on it, another net debit. Now, sometimes it's easy to get, when we have big pullbacks like we did the last couple of days, it can be easy to think, oh man, what's going on here, right? So I'm going to encourage us to just kind of weather the storm, do our rolls properly. In this particular trade, we may, if we didn't have the roll that we're just going to try to do it in class, I would be tempted to roll it early. Okay. I want to get back to always making sure I do it in our class, and we have time to do that. So the kind of the negative to that is that we might not be doing it at the most ideal time that minimizes risk. Okay, because of how deep in the money it is, I may would have wanted to have rolled it sooner. All right, so here is the short leg. Let's go ahead and we're in July 17, 325. That's what we want to roll to. And then on the long leg, we're going to go do it as well. So here is our long. We're going to keep in the month of August. We've got 43 days there. That's still a pretty decent one to do. We're going to create a rolling order here. It's going to call it a calendar. That's fine. Then it switches it to diagonal. So here's our 250. Let's see. Here's the one we're going to sell. Our August 21. It thinks we want to go to August 28th. We really don't. We're going to change this back to August 21. You don't have to roll periods. Sometimes we do, but you don't have to. It's not like it's a rule. However, we want a different strike price here. We want to do the, just a moment. Let me come back here. 250, we want 310. Okay, we're gonna have to go clear out here. That's how far deep in the money that guy is. Okay. So we're buying back or selling off our 250, going long now the 310. That has some decent premium with it. So we're coming out a net debit here. We're going to recognize that's what we still want to do though. Hit confirm and send, and then we're going to send it off. All right. Those, what did that message say? Oh, the wrong button. I wanted the chat button or the message button. Seems like it just flashed a message up here. $921. Oh, okay. Looks like it just flashed the message up there super quick. Okay, we are good. All right, here we go. Let's now go to our account statement, and we're going to talk about the numbers here with PanW. Now, I told you this trade started on May 28th. Okay, so we're going to start here at May 28th through today and get all the trades. Now we got a ton of orders here. It kind of makes it a little murky, so I'm just going to collapse it. Okay, and we're just going to go through the actual numbers here. Now I ran the numbers previously, so I know what they should be. They should be 1804. Let's see if it really adds up to that now. At that point, we hadn't rolled yet our long and short legs that we were currently in. Okay, good. All right. I want you to be able to see all the different transactions. I want you to be seeing where we open them, where we close them, where they get opened and closed. Okay. This is where we started our trade here, and we started out paying $11.70 for it. Okay, so our net debit, maybe I'll put it over here. We're starting out with is $11.70. And I'm going to put it as a minus $11.70 so that it recognizes out of pocket. Okay, but we're down on the trade that much until we start making additional transactions against it. Okay, on it, we were able to take our 250 short leg, which had some decent premium on it. Look at this. We were able to go buy it back here for 17 cents. Sweet. That's pretty decent, right? Sell it for 10, buy it back for 17. We got a lot of that chunk. So a lot of the trade up front is, we're like, good, we're getting it. And then we rolled here. And so overall, our credit here, when we did the roll, was 703. Okay, so I am going to add $7.03. And this is going to kind of tally it up for us. Up next, we sold the 285 put for $725, and then we bought it back for $340. So I'm going to put in here minus $725 and a plus $340 for what we bought it back for. Next up, we did sold to open this 285 call, and we brought in 760, but we did have to close it at a little bit of a loss here at 910. So I'm going to put in here minus our 760 plus, I did that, oh, screwed, I did that one wrong. Okay, let's start over again. I apologize. 1170, and let me get the minus in there first. 1170 plus 703 plus 725 minus 340 plus now 760 minus 910, and that has us at 232. The last number there was 910. Next, we brought in a credit of 550. So we're going to add 5.5. Now we're positive on the trade. Then we have a new credit here on this roll on 629 of 4.86. And another credit here of $10. That gives us 1486. That's pretty close to what I had it before when we started this calculation. I think it was 1408. So something, I must have hit something off a little bit, maybe a finger smash. If you were adding that up with me and you note that it might be different total, let me know. But what's happening here, the roles that we have in here haven't come through yet. They haven't become filled yet. They're still sitting out in our working orders. By the time our class is over, if they're not filled, when we're done, I'll go out, maybe adjust it a little bit so that we get those roles, okay? Expecting that after those roles, we're not going to have nearly as big of a profit here because that's $1,486, okay? But we know we're going to have to roll those for losses. So my expectation is we might actually be wiping out some of that profit, okay? That's where we needed to kind of say, well, let's get the hang here. So really, we have our initial net debit here, but as long as we can like sell premium, sell premium, sell premium, sell premium, it helps build up and reduce that net debit, put us on a side of being positive. But with the big pullback that we saw the last couple of days, and knowing that when we're rolling it, we're going to be losing some money on it, that's going to be a little bit lower, okay? We're going to keep track of this. I'm going to put a little note in my notes here that we're up to 1486 positive on that trade. Okay, and then we'll be able to keep track of it. All right, any questions on that? Alexander has had a comment here. It's kind of hard to come in mid-trade. You're right, it is. And that's why I like to spend time going back and letting you know, this is what the trade was. This is what we've done since we started the trade. And then kind of get you up to date. In order to understand how these diagonals work, I think it's important that we spend the time doing that. Okay, so even though you might be feeling like, oh, I'm only seeing half the story, that's true, you are. But week by week, as you're following along, you're going to be like CB that's like, okay, where's our Cisco trade? What's going on with it? Because you're tracking with it. All right, 2 trades I want to get into today that are new, that are going to be not as complicated as these 2 trades we just went through. Okay, we are going to start out with a couple of stocks that are having some decent rebounds today. We're going to start out with AMD. Now, AMD, you can see I've got some lines here from some previous transactions, but what's going on here? It pulled back, I'm going to say a little bit. It wasn't like it got taken to the woodshed. It went a little bit below, kind of close here about right at that 30-day moving average last couple of days, and then today getting a nice bounce up. We could look at this as a hold, close above the high of the low day. We might look at it as just kind of a nice little bounce off the moving averages, okay? In any case, some traders might like that as a bullish entry. Earnings are not out here for a little bit till August. We're hoping to be done with the trade before then, okay? Well before then, okay? On AMD, we do have some nice weeklies. They're not as liquid as I would like them to be. And so instead of, going with the 36 or 29 days, we're just going to come out here to the August 21s. We've got 43 days. Give us time for the trade to play out. If it's a little slower, that's okay. We have plenty of time for it. Now on this one, I love the open interest here, thousands of contracts. And we're going to start here. We're going to look at doing the 550, 560 long call vertical. Very directional trade. They're going to both be expiring in the same month. So, and I'm going to lock that price in so we can just work with it here. So we are willing to risk 465 in order to make what? $10. The spread here minus 465 is going to give us what? 535. Okay, 535. I'm just going to write that number down here in the margin. Is what we would hope to gain as far as the max. But a practice that we've been doing in our class is saying we're not going to try to get everything out of the spread. It's really hard to do that. So when we get a chunk of it, All right. And I ask you guys all the time, what is your preferred percentage that you like to get out? Lots of you say, I'm happy at 50%. Some of you go a little higher, 60, 70. I've seen some 80 and 85%. Today, let's just go with a straight 70%. Okay. So we're going to say we want 70% of our 535. So 535 times 0.7, 70% of that's going to be 374. We're going to add that to our 465. And that says, let's get out at 839. How many contracts can we do? We can risk $2,000 per trade. That means we're going to be doing 4 contracts here. Oops. And then we're going to say first trigger sequential. And then we're going to put in that exit order. Exit to create opposite order. And the value there is 839. I'm just going to round it up to 840. I think it's trading more in nickel increments and pennies on this one. And then we're going to make that good till canceled. If we get this before we get back in class, we'll be happy campers. There's no guarantee it will, okay? But that's what we're hoping for. And if it dilly-dallies a little bit, we have this buffer in here, not a problem, we have plenty of time. We're going to send that off. We're going to put it in our long verticals bucket. Okay, one more. We're going to fly through this one. Another long call vertical. We'll see if it still looks as delicious as it looked a minute ago. Oh, that does look delicious, doesn't it? We've got CrowdStrike, nice little run up, little flagpole pulling back, 2 days of pulling back. What's it doing today? Bouncing off the 10, a bullish engulfing candle. Nice little bounce here. One thing of note, these guys did a 4-for-1 stock split this earlier, just recently. So the price is a little bit more manageable. It's not an $800 stock now. It's down to $190 stock. All right, same thing here. We're going to go to August. It's at 196. I'm going to go with the start at the 195 here. And we're going to go out to the 200. We're going to spread it out a little bit, even though there are $2.50 increments. So we're going to go 195, 200. That's going to give us a 230 debit. I'm going to click on that lock there again. So what do we need the stock to do? We need it to go beyond that short strike price. It's not guaranteed that it will, but it's bouncing right now. So we like how it technically is setting up for us. We're willing to risk 230 to make what? 270. 5 minus 230 would give us our 270. Pull our calculator out here again, 2.7. And I said, well, let's go for 70%. So multiply that by 70%. That's 189. We're going to add that to 230. It's going to give us 419. I'm going to round it to 420. Okay, we're just going to round it up here. Again, how many contracts can we do? We can risk $2,000 per trade. And so we're going to be able to do 8 contracts here. 7, 8. I think that's going to be around right. Let's just make sure 1840. We'll just leave it at 8. We might be able to get 9, but we're going to leave it at 8. First trigger sequential. Create an opposite order. We're going to be happy campers if we can go buy it back for 420. It's not trying to get everything and milk it. That just isn't practical. And so that's why we try to take something out that looks reasonable that we're happy with. And if you're a 50% person, great, put it at 50%. Both of these 2 examples we've just done are at 70%. We're going to send this on its way and put it in our class account. All right, we have covered a lot of ground today. Okay, so let's kind of review what we've done. 2 long verticals, one on CrowdStrike, the other one on AMD. All right, both of those have little pullbacks popping up really nicely. They did get hammered, like some of the other stocks did get hammered from our liquid options watch list that we're taking these trades off of. Then we rolled. We did some rolling action here. We rolled our PAN-W with the long leg and the short leg. On Cisco, we bought back the short call, sold another short call. We're letting Apple continue to work. It's got some time. We're going to let Texan work a little bit. We're hoping to get out of it today, tomorrow, Monday at the latest. I said Friday, actually, at the latest. Okay. UPS got us out earlier in the day. All right, you guys, that's where we stand. Looks like our Apple trade's doing a little bit better for us, getting closer to capturing that percentage of the max gain. All right. Very good. We've covered a lot of ground here today. So as we part ways, couple things. One, if you'll fill that survey out for us, we always appreciate it when you do that. Number two, if you haven't become a subscriber yet, subscribe to our Traders Talks. Just go click on that button, bottom right-hand corner that says subscribe. Then you can find our content super easy. If this was helpful to you today, go ahead and hit the like button on your way out. That lets others find the class. They know that you found it useful, that they might find it useful as well. And then Barb and I would love a follow on X. Barb Armstrong CS, Connie Hill CS. Barb, thank you for your help out here today. Thank you to each of you for being here today. We'll track all these trades again next week. Coming up next, we've got investing in dividend stocks, I think, with Cameron May. So take a quick break at the top of the hour. Cameron will be back. So we'll see some of you back then. Bye-bye.